right. Well, despite Greece and China rocking global markets, India's managed to hold on quite smartly. Markets have performed significantly better than most other markets, with the Nifty clinching the 8600 levels. What's the road ahead for the markets? What does this mean for fund flows? Should investors play it safe? Should they stay in cash? I'm joined by Dinesh, Khara, MD and CEO of State Bank of India Mutual Fund. Dinesh, thank you so much for joining us on Bloomberg. How do you think markets are positioned right now? We've seen nearly a 3% rally last week on the Sensex.
Thanks, Harsham.
Do you expect this strength to continue?
Yeah, I think this trend should continue going forward, because if you really look at it, the after effect of the Greece and whatever has happened in China, as far as the commodities are concerned, they're a little softened. And India being a major importer of some of these commodities, it will have a positive impact on the corporate earnings. So that's how I look at it. I think to that extent it is to the advantage, and that is the reason why we have seen the kind of positive movement in the stock market in the last week.
What's your reading right now of the monsoon forecast and its impact, Dinesh? You know, we are seeing a few, let's say, confusing signals. The private forecaster believes that monsoons are looking good. The weatherman says it's not so great so far. It's in fact 8% below normal. What's your own internal sort of economists, analysts' expectations are?
I think one positive is at the material point, apart from the deficit or the surplus, what also matters is what is the time when the rains have happened, and particularly in the areas where the sowing has to happen. So I think the way it has moved till now, it's fairly okay. I would say that, because typically in all those areas where the sowing had to happen, it has rained in time. And going forward also, the way it is behaving, it looks like that it is more or less in line, though of course the long period average we have yet to see that how it really pans out.
Okay.
But the expectations are that it should really look okay.
What about corporate earnings? Most people that we speak to say that they're not expecting any dramatic turnaround. What's the number that you're working with for this quarter?
Yeah, I think corporate earnings should be more or less the same as it was last quarter, or slightly better than what it was last quarter. That's what our sense is. Depending, as the things have panned out in about last one quarter, this is what our expectations are. So we are not really expecting too much of improvement, but nevertheless we expect that there could be a slight improvement over the last quarter. That's what our take is on the corporate earnings.
Which sectors are you expecting slightly better performance than others, Dinesh? Do you expect infrastructure, power, some of those sectors that have been feeling the pain for a long time to show signs of recovery?
Yes, I think there could be some signs of improvement as far as those cement and these kind of sectors are concerned. But I think going forward, essentially it would be the consumer discretionaries, which I feel should be doing well. That's for the time being. But eventually, yes, of course, the way structural adjustments, structural reforms are being carried out in due course, the infrastructure sector, road and construction, all those will also look up, but in due course, but may not be immediately. So that's how I look at it.
What about fund flows? We have seen about $7 billion of foreign capital flows come in. What's your reading of domestic retail money? I understand that the mutual funds have been collecting fair bit of money from retail investors over the last few months. Could you explain to us how you see this trend playing out?
Yeah, I think typically as it happens, the positive sentiments which have got generated over last 1 year has generated kind of confidence with the retail investors in the economy too, and accordingly they have also come in last about a quarter plus into the market. So I think going forward, if you compare India as compared to many other global economies, it certainly holds the potential in terms of its performance in terms of its growth promise, which is not seen in many locations across the globe. So I think to that extent, India holds a lot of promise. And the way structural reforms are being attempted also, it is a positive, because there is a very clear focus. Yes, of course, we have to bring in the reforms so that the corporates are there to really register growth on a sustainable basis. That's the kind of an effort which is seen all across. So I think these are the positives which will certainly help the economy in moving up.
So if you look at mutual...
And, no doubt about it, when it comes to the retail investors, though they have come in.
Go ahead, Dinesh.
Yeah, you were saying something, Harsh.
No, go ahead, please go ahead.
No, I was saying that since when we look at the retail investors, they have of course come in at a point of time when the market appeared to be little on the higher side. But I think going forward, since if the corporate earnings improve, they will certainly be benefited in terms of at the point of time, I mean, when they have entered and what they will really derive over a period of time. But nevertheless, retail investors are expected to stay on for a longer duration to really hedge against the market movements. That's the real mantra. And those who have come in and stay invested for 5 years plus, I'm sure they would be certainly benefited on account of the growth story which will be unfolded in the Indian corporate sector.
What are you telling your domestic mutual fund investors right now? Which pocket are you seeing money come in? We've seen midcaps, for instance, perform significantly well over the last couple of sessions. Is money chasing midcaps? Is it coming for balanced funds? Where is the money coming?
No, typically speaking, retail investors should come in according to their risk appetite. Suppose if those who have got a risk appetite which is on the higher side, they can certainly look for quality mid caps too. And those investors who have got relatively lower risk appetite, they can look forward for the large cap or maybe some kind of blue chip funds which have got a blend of both large cap and quality mid cap. That is how I really expect them to really come in. There are various kind of retail investors who are essentially retired people also, who can come in maybe into the magnum income funds, which are more in terms of debt, and some component of equity is also there. So I think much of it will depend upon their risk appetite, and also into the funds which have done consistently well in terms of beating the benchmark over a period of time.
Okay.
That's how they should come in. They should essentially, it's not really, one size fits all kind of a situation. The products are according to the risk appetite of different investors.
Good talking to you, Dinesh. We'll leave it there. Thank you so much indeed for joining us. Dinesh Khara from State Bank of India Mutual Fund, talking about capital flows and what mutual fund investors should be doing. Up next, more monsoon talk. Fears have returned to haunt the economy. GP Sharma of SkyMet will join us to tell us how the weather is looking.